the percentage of ownership, right? So whether the interested parties together in the aggregate owns more than 25 or owns 25% or more than 25%. Okay. Now 6.8.3 guidelines provides that. The guideline says a natural person who does not meet the shareholding threshold referred to in paragraph 6.82, right? That means more than 25%, but who controls the customer. Right? Example to exercising significant influence is a beneficial owner under this notice. Now this is quite open in that regard. Although there's no more than 25% ownership, but this particular person exercises significant influence, right? So again, the definition is not precise as such. So important significant influence, then that person is considered as a beneficial owner. For example, maybe a patriarch of the family or somebody like that. All right. Okay, then 6.84, right? A financial advisor may also consider obtaining undertaking or declaration from the customer. This is a bit difficult to do in practice on the identity of or the information relating to the beneficial owner. Notwithstanding the obtaining of such an undertaking or declaration, the financial advisor remains responsible for complying with this obligation under this notice, right? To take reasonable measures to verify the identity of the beneficial owner. Right? For example, researching publicly available information on the beneficial owner, or arranging a face-to-face meeting with the beneficial owner to corroborate the undertaking or declaration by the customer. Okay, so notwithstanding there's a declaration or undertaking, right, it is prudent. It's prudent for the financial advisor to do its own independent checking, right? Either from the internet, right, or from the face-to-face meeting with the beneficial owner. Call the beneficial owner in and have a chat with that person to establish the fact whether or not this person really is the beneficial owner. Right? So that's in terms of where the customer is a natural person, right, being the beneficial owner. Right? So a holding of more than 21% of the shareholdings in the aggregate, right? In the aggregate, in total, more than 25% of a legal person or legal arrangement, then that person is a beneficial owner, right? If not, then maybe you require a undertaking or a declaration, right? And here the qualitative assessment is whether this particular person exercises significant influence, right? Exercising significant influence, so that person is deemed to be a beneficial owner. Now, what happens if the beneficial owner is not a natural person? All right, it's an arrangement, it's a trust, or it's an agency, or a foundation, or similar. All right, and there's a complex ownership or ownership structure, in terms of that legal person. Right? Then what to do? Right. So what should the financial advisor do? Right. So in this particular case, where you have a natural person, in this particular case, when the customer is not a natural person, right? The customer is a corporation or legal arrangement, right? So you should look at with a complex ownership or control structure, right? So the financial advisor should try to understand the legitimate reasons for such ownership or such a complex structure. All right. A financial advisor should take particular care when dealing with such companies, especially companies with bearer shares. Right. So bearer shares are shares that you can transfer from one person to another quite easily. All right, because there's no name on the shares. It's just a bearer share or a bearer bond. Right. So since the beneficial owner is very difficult to establish, because you can pass a bearer share or bearer bond to hand, right? So from person to person, from hand to hand. It is not there's no name on the shares or the bond as such, right? So for such companies with bearer shares or bearer bonds, a financial advisor should adopt procedures to establish the identities of the beneficial owners of such shares or such instruments, and ensure that the financial advisor is notified whenever there's a change of beneficial owner of such shares. Right? This is difficult to do. At the minimum, this procedure should require the financial advisor to obtain an undertaking in writing from the beneficial owner of such bearer shares, stating that the financial advisor shall be immediately notified if the shares are transferred to another natural person, or transferred to a legal person, or transferred to a legal arrangement. All right? So therefore, again, you need an undertaking or a declaration. Look, I will undertake to inform you, to notify you if I transfer my shares to another person. All right? To determine the beneficial ownership, the person exercising ultimate control over the legal person or legal arrangement. All right? Depending on his risk assessment of that customer, the financial advisor may require that the bearer shares to be held by a named custodian. And that is a safer bet, right? So if you put all the bearer shares with a custodian, right, and a named custodian that will keep the shares, with an undertaking from the custodian meaning a keeper of things, right? It keeps things. So this custodian keeps the shares, keep the bearer shares, and the financial advisor will be notified accordingly of any changes to ownership of these shares or named custodian, right? So here there's a higher level of security or certainty, as it were. Right? So therefore, you know who the beneficial owner is. Right? If the controlling mechanism is either bearer shares, right? So put the bearer shares with a reputable custodian, all right, with a named custodian, and you take an undertaking from this custodian that if there are any changes, then the custodian will notify you. So in that regard, at all times, you will know who are the beneficial owners behind the legal person or behind the legal arrangement. Okay. Okay. Now, of course, 6.87 gives an exception there. All right. For the purpose of 6.15 of the notice, the FA number 6 notice, where the customer is a legal person publicly listed on the stock exchange, we have done that earlier, and subject to regulatory disclosure requirements to adequate transparency in respect to beneficial owners imposed through the stock exchange rules, laws, or other enforceable means, then it is not necessary for a financial advisor to identify and verify the identities of beneficial owners of a customer. Now, I mentioned this to you earlier, right? So if a customer is, for example, a public listed company, say, for example, a UOB Bank or a DBS Bank, right? Or SIA or any other listed company, right? So there's no real need for you to identify and verify the beneficial owners, right? Because through the stock exchange rules, laws, and other regulations, the beneficial owners are known, okay? As such, so there's no need for you to do so in regard to a customer who is a public listed company. Right? Now, 6.8.8 provides the guideline that in determining the foreign stock exchange, right? So if a listed company, as I mentioned earlier, if a customer is a company listed on a foreign exchange, say the New York Stock Exchange or whichever exchange, right? It's subject to regulatory requirement and disclosures. The financial advisor should put in place an internal assessment process with clear criteria. All right, taking into account, amongst other things, the risk factor, right, in terms of country risk, in terms of the country's level of compliance with the FATF standards. All right. So therefore, companies listed abroad, right? Generally, there's no need to worry about beneficial owners, but there is, of course, there's got a qualification to say that, well, if the financial advisor knows that this foreign stock exchange lacks the standard in terms of the AML and CFT standards or requirements, then the FA should put in place internal assessment. with clear criteria whether you need or you do not need to identify and verify beneficial owners. Right? Then 6.8.9 provides that where a customer is a majority-owned subsidiary of a public listed legal person, all right, majority-owned, right? It is not necessary to identify and verify the identities of beneficial owner of the customer. And however, for such a customer, if there are other non-public listed legal persons who owns more than 25% of the customer, or who otherwise control the customer, then the FA will need to identify and verify such owners, right? So there's a guideline there, and that to ask you to say that, look, right? So if it's a majority-owned subsidiary of a public listed company, no need, right? But for such a customer, if the other non-public listed company that owns more than 25%, okay, majority owned, but then 25% owned by another group of persons who is not publicly listed, but private companies or private entities, then there's a need to check the identity and to verify the beneficial owner. Especially these non-public listed legal persons come from jurisdictions that are either grey listed or blacklisted by the FATF. So companies that are set up in, for example, the Cayman Islands or some of the known the British Virgin Islands and stuff like that. Right? That are believed, I must say, they are believed to be non-FATF members. Right? It's easy for you actually to check from your phone, as I said earlier, on the internet, which are the countries that are members of the FATF, and which of the members of the FATF that are grey listed or blacklisted by the FATF, or countries where countermeasures are imposed by the FATF. Now the rest is pretty self-explanatory, like 6.9, I don't intend to go into that. 6.10, then we talk about the ongoing monitoring. Right. I just want to draw your attention to 6.10.3, right, where it talks about the key part of the ongoing monitoring process, all right, for high-risk categories of customers. And it suggests, it provides guidance that updated copies of your passport, customer's passport, identity documents, all right, and all other risk categories of customers obtain updated CDD information of occurrence of a trigger event, right? We'll talk about a trigger event, what's the meaning of a trigger event, so we move on with that one. 610.4 actually gives you some more examples of trigger events, right? 6.10.4, significant transactions take place under subsection 1 there, then subsection 2, material change in the way the customer conducts its business relationship, and C there, in terms of the financial advisor's changes in the documentation, procedures, policies, and standards, or the financial advisor becomes aware it lacks sufficient information about the customer concerned. So examples of trigger events. 6.10.5 talk about the frequency of the review, and this depends on individual customer risk profile, jurisdiction where the customer comes from or where the customer is in. All right, looks at things like nationality, passport, certificate of incumbency, ownership and control mechanism, etc. Right? And 6.10.6 talks about suspicious, complex, unusually large, unusual pattern of transactions. Right? They give cause to suspicion. Right? So here you need to do perhaps enhanced due diligence. Okay? Particularly, I refer you to 10.10.6D, right? The parties concerned. Example, a request to make payment to or from a person on a sanctions list. All right. Now, sanction list is what the Interpol or the FATF puts up, or even our MAS sometimes put up on the internet to talk about sanctions list, right? Right. For example, a sanctioned country could be North Korea, right? So end of the day, there was an issue in the newspapers about somebody being charged, right, for contravening the sanction list. You cannot make payment to or receive money from a person from a certain country or for a certain purpose, right? So that is sanctions list. Okay, so the whole thing there, from the whole paragraph 6.10 to 6.10.11 is in relation to ongoing monitoring. Now, this is also a key guideline in terms of the function of the compliance unit or the audit unit to look at whether these ongoing guidelines are followed. Okay, right. So the details are there. Now then, very quickly, we look at 6.11, where CDD measure for non-face-to-face business relations. All right, we have discussed that briefly in the notice. Now here they set up the details for you as what to do when you're talking about without face-to-face. Now very quickly, I want to draw your attention to 6.11.3. This is some of the details. Right, where verification of identity is performed without face-to-face contact, example through the internet or to WhatsApp and so forth, electronically generally, a financial advisor should apply additional checks to manage the risk of impersonation. All right, you are not face-to-face, so you can't check for yourself the identity of the person. So there is a possibility of impersonation. So these additional checks may consist of robust anti-fraud checks. Anti-fraud checks that a financial advisor routinely undertake as part of his existing procedures. And here they give you some suggestions. This guideline gives you some suggestions. Example, telephone contact with the customer at a residential or business number that can be verified independently. Okay, so non-face-to-face is very difficult. There is a risk of impersonation. Right, therefore telephone. Right, so look at the business address or the person, or the residential address, and you verify that that is the residential address or that is the business number that's given to you. Then you make a telephone call and make sure that randomly you make a telephone call to contact this particular customer. And if this customer is there, well, then at least there is a step to verify that person is the person that you are dealing with. Okay. Confirmation of the customer's address to an exchange of correspondence or other appropriate methods. All right, write to the person, right, and see whether the letter come back is from the same address. Right? I mean, these are suggestions and guidelines. Subject to the customer's consent, and this is again PDPA thing, the personal data protection thing. Telephone confirmation of the customer's employment status with the employer's human resource department and the listed business number of the employer. Now, the customer say, oh, I'm employer XYZ company, all right? So therefore, with his consent, can I check your status? Call the company, right? And say, can I check whether this person is working with you, right? So that is a suggestion given by the guideline in order to identify and to verify, okay, a customer which you do not have face-to-face, right? Then D, confirmation of the customer's salary details by requiring the presentation of recent bank statements where applicable, right? So if the customer applies for certain things and there's a requirement for income statement or income status, then you need information to that, right? Maybe the IRAS document or the bank statement or the income tax, the IRAS document to show the salary over the last 3 years maybe, or last 3 months, pay slip from the company over the last 3 months, or the IRAS over the last year or the last 3 years. Okay. or provision of certified identifying documents by lawyers or notary publics, right? And lastly, require customer to make initial deposits into the account from funds by the customer in an account with a bank in Singapore. That could be one way. Now, of course, in this particular paragraph at 611.3f, well, we assume that the bank has done all the due diligence check in regard to a customer's identity and the verification of the customer's identity, right? So a bank generally is more stringent, or under the Banking Act. So they're very stringent in terms of identifying and verifying a customer's identity, right? I mean, generally speaking, the bank is is required to do more. Okay, so that relates to customer due diligence measure for non-face-to-face. Right? I'm sure as time goes on, there will be more non-face-to-face, right? Because with this trend towards automation, electronic transactions, and digitalization. Okay, so all right, now let's move on. 6.12, reliance by acquiring financial advisor on measures already performed. Now, we have talked about this in the notice provision, so I'm not going to go into details. All right, this is under paragraph 6.29 of the notice, which we have talked about earlier. So you may wish to refer back to 6.29 in terms of reliance by an acquiring financial advisor on measures already performed by the financial institution that's being acquired. Right, so timing or verification is also given to you before. Maybe just for completeness sake, I take a look at that one, 6.13.1. All right, so with an example of deferring of completion of verification, right? If for whatever reason that you cannot complete the verification process and it has to be deferred, well, this is allowed under the notice and the guideline if it is essential in order not to interrupt the normal conduct of the business operations, right? In securities trades, right? Where timely execution of trades is critical, right? Given changing market conditions, right? Sometimes as a relationship has been established, a business relation has been established, and therefore you need to do verification, and the time is a constraint that you cannot complete the verification, especially in a very sensitive trade area, right? In securities trades, time is a very important buy and sell. So you need to defer this issue of verification, right? So one way suggested to you where a financial advisor could manage the MLTF risk arising from such deferment, all right, is to place appropriate limits on the financial services available to a customer. All right, so you can tell a customer, yeah, I know it's very time sensitive, all right? If we defer, then the client can make or lose money as the case may be. So it's very time sensitive, but I will allow you to trade provided I set limits, appropriate limits. All right, limits on the number of trades, the type of trade, the value of the transactions that can be effected, right? So that will mitigate the ML and TF risk and institute a closer monitoring procedure until the verification has been completed, all right? So this is for business reasons, for practical reasons. So if you cannot verify on time, then you set those limits, all right? And then you have stringent monitoring. Under such time, you can verify the identity of the person, the identity of the customer, okay? Now, 6.13.2 is important. I want to draw your attention to that one. Now, with reference to paragraph 6.32 of this notice, the completion of this verification should not exceed 30 business days after the establishment of business relationship. Now, I'm going to go a bit slow on this one. So, although there is a guideline for you to defer the completion of the verification process, All right, but the notice does provide that this deferment, this deferment has a time limit. All right, you cannot defer the process for a year or two where the client or where the customer can happily, execute trades. You cannot do that, right? So the notice provides at 6.32, the completion of the verification should not exceed 30 business days after the establishment of business relations. All right, so you have signed up the customer and you cannot complete the verification, it should not exceed 30 days. All right. Then B, the financial advisor should suspend business relations with the customer and refrain from carrying out further transactions, except to return funds to their sources to the extent that this is possible, if such verification remains uncompleted 30 business days after the establishment of business relations. Right? And C, the financial advisor should terminate business relations with the customer if such verification remains uncompleted 120 business days after the establishment of business relations. And the financial advisor should factor these time limitations in his policies, procedures, and control. In other words, the financial advisors must be very clear and very categorical, all right, in setting these time limitations in their policies, in their procedures, in their controls. All right, so that the frontline people, all right, the audit people, the compliance people, all right, the frontline, the compliance, the audit. Remember the 3 lines of defense? All these people and everyone else in the company knows about the time limitations, all right, in terms of the issue on time for verification, right? So this is something which is not found in the notice, and this is the important guide